All right, guys. Well, thanks for having me today. And it sounds like you guys had some really great presentations throughout the day. Just got to follow up with another great presentation here, so hopefully I can do it justice. So let's go ahead and get started. Now, if we're going to go ahead and go through the Forex volume profiling system here today. And if you guys have, I'll get to all your questions here at the end. Just get through this quick presentation, and then we'll get through questions at the end. If you know, at the end of it, if you specifically your trading system, everybody trades a little bit differently. Whether you're a swing trader or day trader, scalper, or anything in between, you can always go ahead and meet with one of our traders, sit down with them, spend some time with them. You can spend up to an hour with them if you want to see how it works with your system, and go ahead and answer any questions that you may have at that time. So I'm going to try and get as many questions as I can in here today, but we sound like we've got a really great group here today. So let's go ahead and jump into it and get started. All right, guys. So first of all, have you ever wondered, if it is really possible to make money trading Forex? Or what would it be like to turn your trading around to finally make some money? Have you ever wondered what it would be like to have more time doing what you want with the people who matter most? Next slide here. So would you like me to share you how to achieve a proven system to help you make money from volume profiling in any Forex market? A step-by-step process that shows you exactly what to do to make money trading. How many of you want to get as much as possible out of our time together? Well, I want that for you too. For most of you here with us today, this is going to be a long-term relationship once I show you how simple it is to succeed with the Forex volume profiling. And once we show you how fast your trading business can grow, you'll probably want to hang out with us for quite a while. Because in a moment, you're about to discover a new way to trade that's faster, easier, and more accurate and fun than anything you have done thus far. So I promise by the end of our time today, you're going to know everything you need to know about this new way to trade Forex with volume profiling. Would that be okay if I pull back that curtain for you? Well, great, because here's the problem. As we know, most traders lose when they approach the markets. Why? Because they're using the wrong approach. Trading a small account that melts before it grows, indicators that give them conflicting information and aren't sure how to play the volatility in the market, or they just don't have a system at all and they trade with their gut, not knowing where the market is actually going. They are trying to program their own systems and don't recognize the fantastic opportunities right under their indicators nose that Forex volume profiling offers in every Forex market. And it's not your fault. They simply just told you wrong. As you listen to me now, just know that my intention is to really help you fix that problem, because the more and more you listen to me about Forex volume profiling, the more you're going to learn. Because the fact that you're here today means that you're going to make a shift today because you're ready to take action now. So who am I? Well, now, if you haven't been following me for a while, here's a pretty mercifully short introduction. I've been trading Forex since 2005. I was mentored by a chemical bank Forex trader. If anybody remembers chemical bank, that was quite a while ago. I was at a large hedge fund. I'm a former operations manager for Tesla Motors. I've invested over $50,000 in my own Forex trading education, and then became profitable for a full-time Forex trader back in 2008. But it wasn't always like this, so let me tell you how I got here. In 2005, I owned a construction cleanup business. I started trading stocks and options in the morning, and in the evenings, I trade Forex on the side. For the next year and a half, I found myself trading more and more Forex because I was seeing some steady winners. Until I give it all back in a revenge trade, even with those losses, I knew I could probably make this work, so I dragged myself to my construction gig every day while looking for a way to go full time. That's when a friend of mine who worked for a small hedge fund introduced me to a Forex trader at their firm. One thing led to another, and a few months later, they offered me a spot in their prop firm. So I'd have 6 months to prove myself, and it was one of those be careful what you wish for moments. Because while I was jacked to have an opportunity to leave my construction gig behind, my wife was petrified about how I'd be able to support our new family while risking our savings to fund our trades, fund my trades. I knew I'd never get a better chance to go for my dream. So after a lot of convincing, and my wife knowing that once I set my mind to something, there's not much turning me back, I started at the hedge fund. My first months were pretty brutal because the pressure was like going from a bench warmer on a high school basketball team to an NBA starter expected to score 40 points a night. Plus, it was right in the middle of the 2007 market crash, so 401ks were getting wiped out, volatility was at a fever pitch, and the pressure from my bosses questioning my every trade was pretty relentless. At the time of my 6-month trial, it was only slightly better than when I started. I was pretty much a break-even trader at this point. But did show the firm that I wasn't a risk to them, so they gave me a shot. They assigned me to a profitable Forex trader mentor for 6 months, and after that 6 months, I was a profitable trader, I was actually turning a profit in the firm. For the next 4 years, I traded and did pretty well, but the needs of my growing family, high pressure, and the constant risk of losing this sizable account had built up started making me a little bit more cautious. Because investors, they were still pretty leery about the market crash and would have preferred staying in cash versus actively investing at the time, if anybody remembers that around that time. So that's when an opportunity to work for Tesla came up. It was exciting to be a part of a cutting edge new company. My wife loved it because it meant I could be home more and could trade in the evenings, and all would be just great. Life would just go on. Well, I was pretty wrong about that. Tesla demanded I work insane hours, and that meant not only was I worthless to my wife and kids at the time, and by the time I dragged myself home, but I was just trading less and less. So by 2016, reality kind of smacked me in the face at that point. I needed to suck it up and sell my soul to either the corporate devil or find a better way to trade from home full time. I dreaded the idea of starting another business or a different 9-to-5 gig. And I wanted the freedom to make the money I did at the hedge fund, but from the comfort of my own home, so I could spend time with my family and make my trading goal of being financially independent a reality. That's the moment when everything changed for me, and I started looking at a smarter way to trade Forex from home, and that's when I was introduced to NOFT traders. They invented a new currency analytics software that used a combination of volume profiling and order flows. At the hedge fund, we played with volume profiling, but I never really fully embraced it. So, because I always thought it was too technical, but again, I was pretty wrong about that. The more I studied their methods, the more consistent results I saw on a daily basis. So volume profiling helped me see what's really going on in the market. And more important, knowing the right market perspective, the right volume time frames, right entry, right stop. The biggest difference was in my results. Instead of looking at 10 trade opportunities a day with 10 pip potential each, volume profiling helped me go from averaging 5 trades a day with 20 pips to 5 trades a day with 50 plus pips. In fact, I got so good at volume profiling, NOFT actually recruited me to teach what I was doing with their methods to others and become their head Forex trader. So I kissed my job at Tesla goodbye at that point. And today, I want to share the volume profiling strategy that made me more money than anything else. Of course, to profit from Forex volume profiling, you have to know the right market perspective, the right volume profile time frames, right entry, right stops and targets. You don't have the time, you don't have the money to figure all that out on your own. And all the gurus make volume profiling Forex market pretty confusing and complicated because you don't have a simple proven process to take advantage of them. So what I'm about to show you wasn't available till now, and now that is, it's time to become the profitable trader you're capable of. Because of the challenges of knowing how to profit from volume profiling without screwing things up, we created the Forex volume profit system. So what's different about the Forex volume profit system? Well, imagine and picture a Forex system that no longer has you second guessing how to profit from your favorite Forex market's daily volatility. That instantly tells you every single day where the best high probability, low risk trade locations lay. A simple proven system that is the backbone of your entire trading strategy. Now imagine continuously you are feeling the weight of your previous trading struggles lift as you deploy a system that pays for itself and gives you the opportunity to relax and finally trade a system you can count on. So there are 4 keys to Forex volume profiling that you have to know to make the most money in the quickest, easiest way possible. So I know that you've been doing a great job trying to make money from Forex, and maybe you even tried the overcomplicated way to do volume profiling in the past, because that's the people who find me. So some of these keys you'll recognize, so you know that what we're about to say is true. You've likely struggled with some of these steps in the past because part of the magic is in the sequencing and timing. Hopefully this is making sense to you guys. So here are the 4 keys in order. Remember, you can let it be easy. So the first one, the right market perspective. Are you trading the euro dollar based on price? I bet most of you probably are. And if you're buying on just price alone, that's like buying a banana for $500. Who'd buy a banana for 500 bucks, right? Because price doesn't really have any kind of quantifying characteristics. So you don't know if a $500 banana is a good thing or if a $500 banana is a bad thing. Is it valued at fair value? Is it undervalued, overvalued? Simply have no idea. the euro dollar. Value is the key to making sure you never overpay or undersell. So value is perspective in the market, especially the Forex market. It puts perspective on price and perspective on volume. How many of you are taking a short right there or right there? How many of you are taking a long right up here or right there? So this is the $500 banana. This is what happens when you don't have perspective in the market. When you have perspective, you can see that this was a sell zone, and then down here was a buy zone. You would never short down here, and you would never go long up there. You'd have perspective as to whether the market is overvalued or undervalued. And this would keep you from being the guy who is shorting at the very bottom, or the market right before it turns up and goes up, or going long right before it turns down and goes down. That's because of perspective, and that's what you can do with value, knowing where value is in the market relative to price. This brings us to key number 2, the right volume profile time frames. Oh, sorry, jumped ahead a little bit. So what time frame should you look at? 1 day, 1 week, 1 month? Well, actually, you need all 3 of those, because without complicating, overanalyzing the data, we just look at the basic elements. So now you're ready to take the next simple yet important step that 99% of volume profilers never get taught. John. Okay, yep, see your comment there, thanks. So having a dynamic contextual view of okay, gotcha, thank you. All right, if I'm going a little too quick for you guys, just go ahead and let me know, and I'll go ahead and slow down. Thanks for the feedback, John. So having a dynamic contextual view of major market moves. So you now have the most useful real-time marketing intel available to find your best trade location with confidence. All right, the right entry, number 3. After using volume profiling to find our trade location, our entries get based strictly on the quality of the move into the location. We want to trade with the market forces, not against them. To do this, we need to observe how the market behaves when approaching our potential trade location we discover with volume profile. So let me go ahead and give you an example here. So here we have our trade location that we found with Forex volume profiling quality. But notice how the market is choppy. There's no reliable pattern towards a level our volume profiling helped us determine. So trying to second guess and perfectly time these bad low quality patterns is like trying to draw blood from a rock, which leads to a self-doubt, confusion, and the sure way to not make money trading. But when you have great volume profiling trade locations, you can sit back and wait for great high quality patterns. Notice how clear and easy and clean this market move is. These are the patterns that Forex volume profiling helps you spot every single day, where the market comes right to your locations and you effortlessly make entries without second guessing. Just imagine what this will do for your trading when you too can now step in and confidently enter a trade like this. All right, number 4, the right stops and targets. So once we have our location using Forex volume profiling and then can effortlessly spot the great high quality market moves to make our entries, we need to set smart stops. Why? Because if you can know how to set smart stops and targets, you'll win way more than you lose. What does this mean? It means you'll go way beyond just finding the right volume profiles and the right timing. You'll know how to minimize risk while maximizing profit. You see, most trading systems require pretty high risk. Some as much as 500 to 1,000 pip stops, maybe 250 pip stops in swing trading, in order for you to make the big gains that they promise. So you have to bet the entire house on one trade. Then you've got the other end of the spectrum, where gurus tell you can make big money using just a sick crazy, and will only leave you frustrated as you try to get rich picking up the penny-sized profits. So we show you how to trade based on Forex volume profiling with contextual market reading and not fixed pip sizes. On average, this gives you about 20 pip stops. This works because it allows you to get away from the static stops the market never respects anyways, while allowing you to use volatility-based stops without ever having to worry about blowing the account. This gives you two advantages. One, peace of mind. If you trade a small 5K or $10,000 account and still make money. And number two, you can use the same rules as one lot or multiple lots. As your account grows, you have more options. So you can grow with the system without really changing what you do or learn from the beginning. At the heart of our Forex volume profit system is our powerful Forex volume profiling composite tool. This tool uses the powerful Forex volume profiling composite tool that consolidates multiple volume profiling tools into one, displaying the market value, volume nodes, control points, buy and sell zones, and volume distribution, and more. And tool number two, and of course, a powerful volume profiling tool for any time frame. So you have the right market perspective, right volume profile time frames, right entry, right stops and targets, all at your fingertips. And there's much more. So now that you have the 4 keys, you need to start making money in Forex. If you didn't write them down, go ahead and do it now. You have the right market perspective, the right volume profile time frames, the right entry, and the right stops and targets. So imagine, picture this, finally knowing it's possible to make the money you want from Forex. Imagine taking the guesswork out of trading Forex, and imagine a picture having more time and doing what you want with the people who matter most. All right, so if you want to speak with one of our traders and sit down one-on-one and go over and see how you can adapt this to your method, you can go ahead and visit this link here. I'll go ahead and put this link into the chat as well. We'll go ahead and jump into charts, and I'll take any questions at this time. And as a matter of fact, let's go ahead and I'll bring up my Forex volume profiling chart here. So in a minute in the chat, you guys will get the link to go ahead and just sign up for just a conversation with one of our traders. If you guys have questions and you want to see, again, the volume profile, how it works for you, some of the setups that we look for. Again, if you are a day trader, if you are a swing trader, or thank you, Tanya, appreciate that, or anything in between, this is a system that can really be adapted to however you look at the markets. So, if you're a swing trader, you may want to look at a profile that is maybe a 10-day volume profile or 20-day volume profile, or maybe even longer than that. If you're a day trader, you'll probably want to look at something fairly similar to what you see here. So here I have a 30-minute chart, and I have some another tool overlaid on here. It's our supply and demand tool that we have. I'll go ahead and take that off here for now. There we go. All right. And what you see on the left-hand side is a 5-day volume profile, and on the right-hand side is a 1-day volume profile. And what you actually saw here, and this is very useful, especially HH. This is a volume composite. So this is on the right-hand side here, this is a 1-day volume composite, and on the left-hand side here, this is a 5-day volume composite. All right. One of the questions that we get right off the bat when it comes to volume profiling in Forex is how the heck do you get volume in Forex, right? Which is a pretty great question. So what's very important to understand when it comes to Forex trading is that we do not have a centralized marketplace. Everything's decentralized, and so when you're looking at volume from your broker, or when you hook this tool up to your charts, it's very important to understand that you're just getting a picture of what your broker, the volume going through your specific broker. So what does that mean? Well, it means that you're going to have to connect this data. This is on a NinjaTrader chart, and this is we just have it for NinjaTrader for now. You want to go with a broker that's highly liquid, has very deep liquidity. So right now, since Gain absorbed a lot of FXCM's accounts, Gain Capital or Forex.com is one of the biggest liquidity providers out there for Forex in the world at this point. And not a recommendation of them. They have future brokers as well. You'll notice that a lot of their feeds, you may come from Gain Capital. If you're clearing orders through them, you'll notice that they're actually prices that are derived from Gain Capital's feed. So very important note. So very deep liquidity provider, and that gives us the some of the best data that you can get with Forex. I know overseas, for instance, you can you get all different kind of brokers out there, and they don't really have a whole lot of liquidity, not very deep in liquidity. So your data that you see and the volume data that you get is not going to be as pure and as accurate as you're going to see with something like Gain Capital that clears a lot of orders through their order book. All right, so what you're seeing here is the feed is Gain Capital, and this is all the volume reported by them through a day or 5-day, and again, you can put this back to a 30-day. We actually like to see this on a 300-day look back for trade locations throughout the year. So what you're looking for in a volume profile when you're looking for trade locations, these areas of low volume or areas of imbalance, and ideally you want to trade in areas like this. All right, this is our above value area. This entire block down here, this is our area. Typically do not inside here. All right, like to trade inside here. We want to try to trade at the edges of the market, and that's something that's very difficult to do in any market, is really to find a value zone or where people where 70% of the transactions occur, where most of the volume occurred. But in the Forex market, you know, some of this really hasn't really been seen before. There's been TPOs out there, and we do have our own TPO indicator. And TPOs, again, are approximating volume in the market by letter blocks. If anybody's familiar with TPOs, or time price opportunities. But this is we have a futures product very similar to this, and we've adapted. We took that same concept and applying it to Forex now. But ideally, these are the locations that you want to go ahead and trade, is these above value areas or these below value areas that you see down here. Okay, and I just want to walk you through this setup right here, and I'm going to show you a tool that I didn't really cover yet, but you might find a little bit interesting. So getting into the beginning of the day here, you can see the volume. Go ahead and tighten the chart up here a little bit. You can see actually going into yesterday as a trade that I took up here, the volume was really starting to build up here towards the top. You see this high volume node right through here. Volume's really building up here. We actually had a supply and demand area here as well. But once you have these areas, especially in the Forex market, when you have the volume build up, you always tend to get these spikes. And you'll notice this quite often, where you have the high volume area here, and then you'll notice that you'll get these kind of low volume area spikes that you get here at the top. Very common of a market top being put into the market here. So you have the high volume here, you have the volume as price spikes up, you really have that volume really starts to trail off here. You're above value on a weekly, and you're above value on the day. This is actually a pretty good trade setup through here. And then the next step is, you know, what do you target here at this point? Now, at this point, you know, the POC, which is this area right through here. All right, this is a little bit close. This is called the point of control, or the highest volume point that you find here in the volume profile. And you know, this can be a really great target on the day. But when you're this close and your risk reward is that tight, not an ideal setup, especially when the profile is being created early on in the day. What you want to go ahead and do at this point is start targeting the weekly POC. As you can see, it's down here. All right. So once it gets into this area, and I'll show you the trigger that went ahead and triggered that trade here in that area. You define your market. You know the area that you want to trade. And the POC gives you a great target to go ahead and target for. And this was actually a pretty decent trade. And if you were able to keep this one, this turned out to be a pretty great trade on the day. And it's set up really nicely through here as well. I'll just go ahead and show it to you on a lower time frame here. Just trade futures on the currency that you like. So I like the spot Forex side just because the flexibility of sizing, getting in and out of the market, pretty easy as well. When it comes to the futures market, I will trade futures from time to time, just the spot currency side. Just, as far as not, I've been trading Forex for a long time. Liquidity that you get there as well, pretty solid. And when you actually compare the volume profiles from futures to Forex, you'll notice that they're actually pretty similar. They're pretty close. They're about anywhere from about 95% accurate to about 97% accurate, somewhere in that range. They're pretty close. So I've been trading Forex for quite a while, and it's like the flexibility size, which is why I trade spot. All right, but you could certainly do this with futures as well. We do have the same product for our futures. You can trade the 6E and the 6B. All right. So let's go ahead and now this is something that you've seen on the future side, but certainly haven't seen on the Forex side. So this is market profiling. This is order flow within Forex. And again, very important to understand is that when you're looking at this, that you are just seeing your broker's order book, getting just a clue and an insight into what's going on into your broker's order book. But if this is gain, I can't see what's going on in Oanda or FXCM or so on and so forth. So what we're seeing here is actually this is actually the low on the day. You saw, as price was getting down here, you saw buyers getting more and more aggressive, these green boxes here and here. You saw these blue numbers here giving you buy imbalances in the market. On the right side, you have all your buyers. On the left side, you have all your sellers. So if you're familiar with footprints, you'll be very familiar with what you're seeing here. But yeah, again, all your buyers on the right side, executed orders coming into the market, and all your sellers here on the left-hand side. A really nice bottom. But let's go ahead and go back to the signal in this trade here. All right. So when we got into this area here, we started to see the volume build up. And every time you're trying to fade a market, especially a market that runs, if you remember the setup that we were looking for, we were looking for a move where prices continually moving into a location here. And you saw that going on here. It's a 30-minute chart here once again. And we still saw some buyers present here within the footprint, but as we continually moved higher, we started noticing some of these things here within the footprint itself. Is that you see this 306 here? So as price is continuing to move up, and this is a buy candle here, we actually see that there's actually a lot of selling taking place within that candle. This actually adds up all the buy orders, tracks all the sell orders, and gives us a net number here at the top. So this is telling us that the sellers are winning this candle by 306 orders. So we call this a delta doji, just telling you that when you have a buy candle, you actually have sellers winning in a buy candle. Not very common that you see this in the market. So we saw that at the top of the market. We saw selling certainly taking place here. So the trigger for us in the market was actually right through here. All right. Yeah, right through here. All right, we had our high put in here, started trading down, and we saw these red boxes telling us that as price is going higher, it's our reversal signal. As price is going higher, sellers are starting to come into this. Our buyers are coming out, and sellers are starting to come in. We see these red numbers throughout here. Okay, and you actually see some red numbers up here as well. You start to get context behind here that selling was taking place, started to move forward, and you start to get some of these reversal signals right through here. So as price is moving higher, you have 995 buyers, 864, 292, 245, and 99. Same thing here. You can see as price is moving higher, buyers are sequentially coming out of the market, giving us a reversal signal here to go ahead and take advantage of. That was our entry right there. And we paired that with the conditions of the market provided by volume profiling. We are in above value area. We started to see volume really start to build up in that area on the profile. And then our trigger was simply just looking at order flow here and just looking for a signal to go ahead and go short. And then we finally got a signal here after the high was put in. A nice entry to go ahead and put it right here. Now, you can certainly do volume profiling without order flow. Just explaining how I enter the chart with some of our other tools that we offer as well. But your signal to go ahead and get in the chart or to get into a trade like this, we go through in our education, could be very simply a candlestick pattern that you're comfortable with. It could be a divergence in an indicator. The volume profiling system is really flexible to however, again, however you trade, and you can really add this on there to provide you a little bit more context to what you're seeing in the market to go ahead and take advantage of. But by itself, on a system by itself, if you simply, as price is moving higher here, simply get short off of a candle formation or a divergence. We have many of our traders that trade just like that. That works out pretty well. Do you guys have any questions so far? All right, this is our TPO indicator. So for the volume profit system, what you would get here is the composite. But once you sit down with one of our traders, you could certainly go over all these other tools with you as well. But the TPO, I'll go ahead and show you that. Pretty interesting here. What you'll get is a TPO is kind of the classical way of looking at volume profiling, volume profiling back in the 70s. You can guys go ahead and take a look at stuff by J. Peter Stadelmeyer and James Dalton and whatnot. But for every hour that goes by in the Forex market, it's going to go ahead and print a letter, and it's going to go ahead and assume volume at a certain location. On the back side here is the actual volume profile, but on the front side here is just it's approximated volume. And you can see the TPOs are pretty close. You can see the high volume node here on the actual volume. You can see it here as well. The same thing here. You can see high volume here and here as well. Yeah, the TPO is a pretty useful tool as well. You can see I use it on this chart to confirm some trade locations. It's the same British pound trade that we were talking about here earlier. Use that with, and this indicator that you see here is actually the VWAP that we actually offer here as well. But HH, good question. So on this trade here, so if you're going to get short here and you're not using Andreas, the order flow in futures and Forex, yeah, it's about 99% similar. Yeah. A lot of there's you can see sell blocks and buy blocks within the order flow footprint as well. But yeah, it's they look identical. All right, as far as the entry here, where you'd get short if you're just using candlesticks here, I would certainly wait until this candle here to go ahead and go short, that right there. And so your entry would be on a break here, and your entry would be somewhere down here. All right, and you do have an outside candle here as well, right here at the top, right there. So again, using candlestick analysis, you can go either way. If you want to be more aggressive, go ahead and use that. You want to wait for that break, certainly go ahead and use that. So that would be your entry. Now, as far as your stop, this is where volume profiling I think really helps out as well. What you want to do is look at the profile back here, and you want to start looking for these little low volume areas. You see there's through here, and there's low volume area as well. Okay. You want to start, you want to look for these low volume areas here. So if you have your entry here, you're going to want to put your stop, oops, sorry about that, right there, okay? And if it's right after one of these high volume spikes, it kind of really helps you out as well. You can see we never even came back to that, but when you find these little low volume areas here, and especially if your price is starting to move away from them, very unlikely that price is going to come back and spike you out there. Now, normally you're looking for a pivot high or a pivot low to go ahead and put your stop. But with volume profiling, you can actually look in the context of volume, look for these little low volume areas, and go ahead and park your stop through here. So you don't really have to put it at the very high here. You can certainly put it here, or you can put it in this low volume area. Oh, sorry. Trying to draw with the mouse here, a little difficult. It'd be somewhere like right in this area here. You have a couple different places you could put your stop. Entry would be on the break there. Ideally, as far as target, at that point, your target is going to be the POC, is going to be this weekly POC right through here. All right, that would be your target. Now, volume when you're looking at high volume versus low volume areas. High volume areas, you see a lot of trade buildup and you'll notice that price acts like a magnet. So if price is going towards a high volume node or high volume area on the volume profile, price will certainly attract itself to that area and kind of get tied up here. So with the POC is the highest volume points, in this case within a weekly pro. Initially, that is going to be your target. So this is your entry, that's where your stop is, and the POC is going to be your target. You can see price nailed it there. And as a matter of fact, let me go ahead and back this up because POC, go ahead and take a look at that. So you can see here, when you enter the trade, that POC would have been a little bit closer here. All right. We can see how price really respects it, and as trade went on here, POC is going to shift down pretty quickly here. All right. So initially, the target would be here, but if you took off a lot there and let it run a little bit further, you can look at the profile and see this high volume area through there as well, and park your order or your target down there. So volume profile really opens up a lot of possibilities when it comes to trading. You're pretty tight risk here, and then you can see the reward here. On that one, you probably would have been risking about 12 pips, and you could have made about almost about 18 to 20 pips there. But if you let it run a little bit longer, you could certainly have seen how, or look back in the profile, you can certainly see where that high volume area is there on the weekly profile and target that as well. So you have a few different options there. No, it's part of a package. We have a couple packages, and that you can take. Yeah, so we have a couple different. Yeah, you can see all the tools that are coming through here as well. Yeah, these are all the tools with Forex volume profiling. Excuse me, with Alpha. Volume profiling will give you the composite. With the Alpha tool, it'll give you order flow, institutional trade level, supply and demand, market valuation, a lot of different things. A call for the VWAP. Yeah, some platforms do offer the VWAP there. Possibly as free as POCs. That's some platforms will offer that, some won't. We can look at the POC over a 5-day period or 10-day period. So we have really pretty great flexibility with our tools as well. So you can look at a 300-day POC if you like. So some tools, some platforms don't offer that kind of flexibility when it comes to their tools. VWAP, for the most part, let's go ahead and look at this VWAP here. You'll see in most platforms will offer. Sorry about that. Yep, just the VWAP line here. All right, but this tool, you can actually put deviations in here, and it can act as a Bollinger Band type of setup, but it's all volume weighted, and then it starts new every single day. Yeah, you can see that as volume comes into the market, it starts expanding. Yeah, not similar. I wouldn't say it's similar to a cloud. You look at the VWAP and then you start looking at standard deviations away from that, very similar to the way you look at Bollinger Band. And Andreas, yeah, we do have a couple different packages. So if you visit that link that we have there in the chat, we can sit down and try and figure out which one works best for you. Now, if you're a swing trader, you may just want supply and demand evaluation and volume profiling. So we can come up with a program, a package for you there. And if you're a day trader, you may want the complete set. You can use order flow not just on a 30-minute, you can use it on any time frame. If you're a scalper and want to use it on a 6-minute, these bars can get kind of small here, but you can see order flow on any time frame. So if you're a scalper, that could certainly be useful for you as well. All right, just got a minute left if anybody has any more questions. I guess that'll be it. Thank you everybody. Thanks for your time and thanks for your questions and your feedback. The money flow indicator, HH, that's a good question. Yes, I'm not a big indicator guy, to be honest. I like to trade as naked as possible, I guess, but I'm always I do a lot of volume profiling, a lot of volume analysis, volume spread analysis, a lot of volume analysis in general when it comes to trading, but I'm not too big into indicators and whatnot. That's just me personally. But MFI could certainly use that from time to time. As a matter of fact, You might like this. You see these, you have these little things down here in the bottom. So we actually have an oscillator. This is called a purge alert. We call this a purge alert. And this is an oscillator built into the order flow tool itself. And the major part of that calculation is actually MFI, or the money flow index, or indicator, sorry, the money flow indicator. And when that is oversold or overbought, it'll actually go ahead and trigger these, kind of giving you a signal that you are, this is a long setup here, and this market is oversold. So you don't see these too often. Let me see if I can find another purge alert through here. Yeah, here's another one here, kind of a false signal there. But yeah, here's another decent ones under here as well. So yeah, the money flow indicator is kind of built into the built into the tool as well. It's a good question. John, thank you very much. I appreciate that, and thanks for your feedback. It helped me out a lot. Grant, yeah, we do have a value POC. I think that's what you're talking about, that point of control. Yeah, we do have, this is the daily point of control here, and this is the weekly point of control. But again, you have flexibility. You can look at a 10-day point of control if you like. But yeah, you have a daily and a weekly. All right. HH, you're very welcome. All right, guys, well, that's my time. Thanks again for your questions and your feedback. It was great spending time with you guys today. Please visit that link if you want some more information or just want to sit down with one of our traders to see how it could fit you best. And hope you guys have a great rest of the day. Tanya, I'll go ahead and hand it back off to you guys.